We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right, welcome back, everyone, to the show. Oh, let me actually change this over to a little bit brighter. Just do that. People are like, it blinds me. All right, so first topic of today, we're right on time, and selling it all is dumb. All right, so what are we referring to? We're referring to, of course, market timing. If you guys watched our live stream last week, we had a segment where we discussed our favorite contra indicator, or one of our favorite contra indicators. He's more of a macro contra than an individual stock contra. And that is, of course, me, Kevin. If you're not following me on Twitter, if you're watching me on Twitter, thank you. But if you're not following me on Twitter, go follow me on Twitter. Each and every time he says something silly, we make sure to quote tweet him with the laughing emoji. Just for our sake, so we can record it. All right.
Is Kevin that bad?
Yeah.
I don't follow him that close. I don't follow him at all, actually.
He's pretty bad. I don't follow him. What I'll do is I will go on Twitter sometimes and I'll just search his name and then I'll see if he said anything interesting. And usually it's just going to be, for example, last week it was right before the Fed rate cut. He said, sell things now. Because you're gonna see a big sell-off in the markets, and that's exactly the opposite of what happened. I was listening to Dan's live stream. Dan, I love the part where you said it's priced in. We've been joking around a lot about that because that statement floats around sometimes. It's always priced in. It's priced in. It's not priced in, or it wasn't priced in.
Nothing's ever 100% priced in.
Never.
Nothing. Exactly. You can't price something at 100% until that thing happens. It could be priced in, and the day it happens, it's almost irrelevant because it's such a small amount. But nothing's ever truly priced in.
Oh, yeah, exactly. So I have the S&P 500 pulled up to actually. I have to zoom out here so you can kind of see these little dips. We had one in April, and I'll show here. This is one where Kevin tweeted the beginning of the sell-off. Or the sell-off begins. Perfect time to give him a little bit of a laughing emoji. And then we had a more recent one right before the pop where he said, the sell-off begins, sell everything now, go on vacation, come back in November. So I put up the poll question for everyone just to ask you, hey, have you ever tried to time the market? Do you try to time the market? And then we'll go over a little bit why that is futile. And when we say the market, we're referring to assets in general. Choosing to not buy an individual stock, that's not timing the market per se. Timing the market, I'm referring to exposure to stocks. So you're saying, I'm not going to have any exposure to stocks. I'm out. Buy. So you have the S&P 500, you have total world index, you have the total market index. You choose, you make a choice to pull out all your capital for whatever reason. Typically it's macro based. So I'm wondering, and I think my audience, you guys are the vast majority are going to say no. Some of you say yes, you're probably not being serious. I'm going to assume the victory is a no. But believe it or not, a lot of the newer people and some people who are experienced attempt to do it a lot. And I think that someone like Dan, who said, he's never done it, and he's been in the markets longer than myself. Andrew, have you ever done that? Have you ever said, I'm going all cash, I'm out?
No, never.
Never. Yeah.
I've gotten heavier cash at times. I've strategically been okay, maybe I go more cash. Although now I think the way that I prepare for a downturn in the market's a little different. So, yeah. But no, yeah. I've never, no.
And there's a discussion we had. You guys may have heard this before in the past, but do you know that if in the past 20 or so years, if you missed out on just the 10 best days of the stock market, your returns are almost cut in half? Let that sink in. And then if you keep doing that, if you keep deducting days, you keep reducing your returns by way more than you think. The point is that the majority of the returns in any given year for the market, we're talking about the market, happen from just a select few days in any given year. And so playing around and pretending to be someone that is going to perfectly exit and enter right before those same days and that you're going to capture those days is, I don't know what to tell you. I have a bridge to sell you. So, yeah. And Dex brings up a good funny point. Options are timing, right? Well, with options, you are actually making a statement about a duration for a specific stock, but no, you have a lot of pun intended optionality with what you can do and how you can profit. It's very different. Buying and selling is like, I'm either not going to profit at anything, or I'm going to profit something or lose something. You're choosing to sell everything at a given date, and so you're now completely out. And then you're re-entering, which now poses a risk of it going up or down, but presumably you think it's going to go up. So the odds of you doing that second part correctly is terrible. So not worth it. So this is something that I think a lot of investors out there, you might find on YouTube, you might find on Twitter. I'm sure we've talked about some Twitter accounts here and there that they've basically done terribly and they've kind of panic sold. So they're like, oh, I'm all out of stocks. In fact, I think, we talked about me, Kevin, but there are some other micro ones that, panic sold after having all these shitcos, and one of them that you've actually stumbled across.
He's actually not that small. He's kind of small-ish on Twitter, but
no, he's huge channel,
yeah.
But yeah.
Yeah, no, his name is ticker symbol U. I prefer he's ticker symbol me because all he does is make videos to monetize. But complete moron. His first ever video, if you guys want to know, like he basically made his whole channel off of following ARK. Like end of 2020, beginning of 2021, and talked about how ARK is the greatest investment firm ever. And yeah, and then he just kind of turned into, I'm going to make content. Yeah, actually, if you want, I can pull up. Let me see if I shared it somewhere. Oh yeah. You want to see here? I'll send you this picture. This is him. By the way, he has said, because it's not in this, but he has said at one point Teladoc was one of his biggest positions. And so that's not included in here. But I'm going to send this to your, and it's a little blurry. Let's take a screen grab. But here's his 2022 portfolio, and I understand, like, oh yeah, you can grow from this or whatever. So this is, and in the video, by the way, he was already down. So he started his. He did have bad timing on when he started his portfolio. Started November of 2021. This is February 2022, and he was already down. Or maybe is that Teladoc actually right there? It is right there. Okay, so he does have it in there. He was already down 20% at this point, and I think it fell a lot more than that.
But he's a lot richer than this now because of some interesting things he's done.
Oh yeah. Do we want to talk about that?
Yeah, we can talk a little bit about it, but I want to focus more so on market timing for this segment. But yeah.
Okay, so I'll send you this one then. Here, if you want to talk about market. Oops. Let me go back. Well,
but again, while he's pulling this up, remember the majority of your returns of the market just come from a few days. But everyone thinks they're that guy. They're going to do it. Not everyone. I'm sure many of you don't think that.
Can you zoom in a little bit?
Of course.
There you go. This is August 5th. This is the Japan carry trade day, where the market was down. It says stock market just hit extreme fear, lowest sentiment since October 2020. Build cash now. And if you scroll down, because he clarifies, because someone goes, don't you mean deploy cash now? Go back up, scroll up a little bit. Right there. Don't you mean deploy cash? No. And then you can go to show replies. Disagree should dollar cost average into good companies when there's peak fear. Average into a crash, not during peak euphoria. You would never want to average into a crash. You want to average out of one.
Wait, I don't even understand. What does this even mean? October of 2023. You threw a rock in October of 2023, and you probably did well. A lot of,
He was bearish then.
but this is with hindsight. He's saying this with hindsight. That's why I'm not understanding. It's like if I know that if I go around the corner, I'm gonna get mugged, and then I go back in time and then say, I'm gonna go around the corner, but before I do that, I'm gonna go home and get my most expensive watch, put it on, and then go around the corner.
So part of me wonders too if this is engagement bait. Because if you also go back, can you go to his posts? He doesn't post that much. You can see it. Scroll down. On the same day, he's like bipolar. I think he keeps scrolling down. It's not too far, but just keep going. You'll see it again.
This one?
Oh, well, that one too. That one's saying, by the way, oh, Fed cutting interest rates. Actually, the stock market's going to go down when the Fed pivots. Okay. More
Was it the last live stream that we were talking about? I know in the weekly calls, it was the last or 2 weekly calls ago. So 2 weeks ago, we talked about how every freaking guy and their mom on YouTube was saying, September crash, September's the worst month. And then I was like, because this is happening, all the shoe shiners are talking about it, it's not going to happen.
Yep.
So,
I mean, it's just, I don't know how these guys are so good at this, but keep scrolling. It's not too much longer. Right. Okay. So right below this, so on the same day, he posts instead of a bull market versus bear market, I think buyer's market versus seller's market. And this one's actually pretty funny because if you click on it, and by the way, look at what it's just all tech. But scroll down. Last time I listened to you, fuck, this guy roasts him.
Holy shit. Stop buying great companies when they're overvalued and blaming others for your poor choices.
Which he has a lot of experience with because that's what he did.
Yeah. Yeah.
So, but
well, the market timing pumpers, whatever you want to call them. This is one of them.
Yeah. And well, this guy got killed so bad. Like he had a portfolio. I haven't looked that deeply. I don't think he even posts a portfolio anymore because he got killed so bad. He found out actually it's easier. I don't show my port because I'm not a good investor. I'm a bad investor. So what I do is I just talk because I can talk about things and make YouTube videos and then monetize those. And that's how he does it. I don't want to spend too long on this though. The guy's a clown.
Yeah.
Absolute. If you listen to this guy, this is what I want to say. This guy, and we can talk about this, he does not give a shit about you. What he cares about is getting your attention to monetize you. And he has done that very well. And he has been able to monetize that well. You are the product.
Yep.
That's what you are with this guy.
Yep. People do not understand that.
He is rightfully a ginger because he has no soul. If you remember the meme back in the day, gingers don't have souls. But he is just looking at YouTube and looking at you and saying, how many more sheep can I feed to the wolves? That's what he is.
Yeah. And I think in the future, we're going to talk about some of his very questionable behavior. This is an individual who has done some very questionable things.
Yeah.
So, okay. So market timing. Let me close the poll. I think I want to see if we have any. We have some people who said, majority said yes. So let me see how many of you answered. So we had 35 votes. 74% of you said yes, you timed the market or tried to time the market. 25% of you said no.
I think that comes down to definitions. I know you defined it, but people probably vote before even listening to how you define it. So
Or, it's like, oh, haha, I'm going to say yes.
it's all sarcastic.
Yeah, completely. I highly doubt the CM community is market timing types.
Mhm.
So, anyways, that kind of summarizes that. Let's move on to the second topic. So we're going to start the second topic a little bit early, and let me adjust the timestamp to account for that. But the next topic that we're going to be discussing is Visa and the DOJ. So we'll also be talking about Google. So, and do we think it's an actual legitimate concern? Is it a buying opportunity? How do we feel about it? So,
Visa?
yeah, Visa. I'll show what's happened recently. So we have in the 1 month, you can see it when
What's it up here?
So year to date, it's not up that much at all anymore. But let's say before the fall. Before the fall, it was 13.02%. So it is underperforming the market.
How much was it on a 5-year chart? Just out of curiosity.
Oh, on a 5-year chart, I think it is doing fairly well. So let's compare it again to the S&P.
No, I think it's pretty bad.
Oh, no, it's not good. Never mind. The market has done better than I thought in 5 years.
Dude, what was it? See, now I'm wondering what was its valuation in 2019?
Mid to high 20s. No, not mid 20s. High 20s, low 30s.
Is that your final answer?
Yes.
Okay, let me check. We're talking PE, just to be clear. We're on the same.
Yeah, PE.
Yeah, that's what I was going to look at. You say mid 20s, high 30s?
Oh, are you saying trailing or the forward at the time?
Forward.
Okay, forward. Yeah, then that's my answer for forward.
Right below 30. Oh, you know what happened? The COVID, it shot up to 40. But everything was overvalued during then. So, I mean, fair enough. And then now it's back down to mid 20s.
You mean when in COVID? You mean the tail end of 2020 or 2021?
Yeah, 2020 into 2021. Yeah.
Okay. Yeah, that makes sense.
So it's now looking like it's trading. Honestly, today it looks like it's trading at like its normal multiple, honestly.
Yeah.
So back to the question of the DOJ stuff.
Mm-hmm. Do we need you want to summarize what's going on real quick?
I haven't been following that closely. I haven't had a lot of interest in Visa. So
that's great. So I'll say it to you, and then you tell me how you feel about it. So the DOJ approached Visa with this complaint, and the action or the accusation is that they have through various agreements and preferential treatments, they have made a very let's call it unfriendly environment for these smaller competitors that are apparently cheaper. And we're talking about the debit card transactions. They're not discussing the credit card transaction. They're particularly talking about the debit card transactions. Yes, you're like, and they say that Visa has increased its take rate, not increased it, but kept it high, and not made it through the various practices like preferential treatment with banks and making sure that if they were to use another platform, they would be cut out from maybe the credit card stuff. That's the accusations, or at least won't get, again, this preferential treatment. So it disincentivized, again, alleging these banks from utilizing other networks for their debit cards. And then at the same time, it's making the case or making the accusation that they're causing the price of everything to go up. I think that's actually maybe paraphrasing a little bit, but that sounds like, I think that's a direct quote.
It's kind of true in a way, because have you noticed that like restaurants and everything now, they charge you? I actually made this comment to my wife the other day. I was like, I just need to start carrying cash because it's like 3% more whenever I go to the restaurant or whenever I do anything now. No, so a couple questions. Who are the other players in debit cards?
In debit card transactions, besides the other ones that we know of, such as like American Express, Discover.
Yeah, but those
diners.
They're not small. Like
Oh, Court Card. Court Card might be one of them.
who's that?
That's was it Court Card or was it someone else? There was one in Germany that went bankrupt because it was a fraud, but then there was one that had a similar name and it was an American co and it was a nano cap. They have a big business in prepaid cards for employees. Well, they're big business. They're a really small company, but that's where they make all their money. I think it's Court Card. That's one.
So I'm just looking at like issuers of debit cards.
Mhm.
This is
Networks.
just Google. But they have MasterCard and Visa on there. So I think, and then American Express,
Mhm.
Bank Rate. I don't know who that is. U.S. Bank, Bank of America, Discover, Capital One.
You see that, and then it's throwing in banks in there, so Google doesn't understand.
Yeah, that's what I figured.
Yeah.
But I'm just saying, like, I'm kind of confused. This is kind of weird to me. And the thing is, ever since the FTC, and I know this is somewhat different, but ever since the FTC sued Spirit Airlines JetBlue merger and won, I never know with litigation now. Because that was befuddling. I mean, so, but to me, this seems like a really weird. Is a part of me that says, though, that like the DOJ does have to step in potentially at some point if Visa doesn't regulate itself to regulate their take rate or like the overall debit card transaction. But Visa is kind of regulating itself. I don't think they've greatly increased their take rate.
No.
So that's why I'm kind of confused. Is if they were increasing the take rate and they went from, well, what do they get, like a 0.5%?
No, their debit card I think is a flat fee.
How much?
I want to say, I'm trying to find it. I think it's flat fee, but there might be a percentage in there too. I shall find it. Give me 1 second. I want to give the more accurate. So the assessment fee is 0.11%. That's what I'm getting, 0.11% for debit cards.
0.11%?
Mm-hmm.
Dude, that's like insane. That's just price gouging.
Yeah, they're raising the price on everything. And then I have another. So interchange fee can be from 0.05% plus 21 cents or 2% plus 20 cents.
I just want to say when margin calls, I think has the best defense that Visa should give to the judge. Without Visa, there wouldn't be any immigration.
And then card. So then there's card. I'm giving you more than you wanted, but then there's different charges if you have the card present versus card not present. So like an e-commerce transaction versus like you go to the store. So if you have the card on hand and you're going to like your local Walmart, you have 0.8% plus 15 cents. And then if you have a not present transaction, which is e-commerce, you have 1.65% plus 15 cents.
I mean, part of me almost wants see now. I'm actually more curious because like
these are all debit cards, by the way. These are not debit cards.
Why is the DOJ targeting this? Is kind of weird. I don't know. To me, it seems like an odd thing, and like I'm not following it, so I can't really give an opinion on it. But it just seems like odd. I feel like there's probably, I don't know.
Mm-hmm. I don't see the argument that they're making because first of all, like the fees. I know they're talking about debit cards. These don't seem. It doesn't seem like debit cards are what would cause prices of everything to go up. I would think that's actually more credit cards. we don't call it the debit card tax. We call it the credit card tax. You know, the statement of like the reason why paying cash is considered silly by some is because you're paying the same price as someone who has a credit card, but the credit card is offering rewards. And the reason why you're paying an elevated price is because the charges that the bank puts on the merchant for that transaction.
I'm just overall somewhat confused. Do you have like an opinion on like why they're doing this?
So we had a conversation about that within the club.
Mm-hmm.
What we came out saying is basically they just want money. Because the solution to this, it won't really matter or be that material to Visa. There's already been some articles coming out, and by the way, Visa's gone through this in the past. So has MasterCard. They've been involved in antitrust lawsuits with the DOJ. Each and every time, it's been a nothing burger. It probably will continue to be a nothing burger. There is like a discussion about a threat coming up from Fiserv, ticker symbol FI. They recently entered into a partnership with Walmart, where you can have, using the Fed system, where you can have your transaction directly from your bank account to Walmart to pay for your groceries. But me saying that out loud, that is a product I would never use. That is stupid. I think that's a dumb product, first of all, because a credit card is superior in every single way to a debit card.
Mm-hmm.
And then a debit card is superior to that other one because the other one also doesn't come with any protection. So some debit cards used to not have protection. Then suddenly debit card products started coming with protections in place for fraud. This system has no protection in place for fraud. So like if someone were to technically steal your information and were to somehow able to, you know, purchase a product using that system, there's no protection for you. But yeah, I would not stop using my Visa card. It would not, or my MasterCard wouldn't stop, or my American Express.
Ooh, I like this question that Bob was asking. But
I'll bring it up.
before we get to that, by the way, I just want to say, because I remember this, MasterCard was originally Bank of America's, right? They own that. That's a pretty big.
Oh no, Visa. Visa was Bank of America's. MasterCard was the
Sure.
alliance of banks. Yeah.
Oh, you're right. MasterCard was a response to Visa. Yeah. So, okay, why doesn't Apple come in and steal Visa's lunch, Fabio?
Well, because Visa is a network and Apple is not a network. Who they're coming after is the gateways. They can come after gateways.
Right.
So like,
sorry, I didn't mean to cut you off.
No, you're fine.
One of the things this reminds me of, and we had this discussion, I remember we had this discussion in 2022, mostly laughing because that's when Chamath said that the greatest pair trade that you could do at the time was to short Visa and MasterCard and go long crypto projects that'll solve payment problems, like Ethereum, stuff like that, at the beginning of 2022. And what he doesn't, and the funny thing about that was, even if you use these payment networks, at some point you would have to take those off into fiat, and you'd still have to use rails. So like Visa and MasterCard are the rails, they're the network. So in order for people to process payments with Apple, you still have to use the rails of Visa and MasterCard. So they actually work in conjunction. I don't know. I don't know it well enough, so I don't know how you would actually, like, I guess American Express has its own rails. It's own, like American Express, that's the thing about it, is it's completely its own network. I don't know how you would make your own network now, because I feel like what probably would happen is you'd have to start off with a large loss up front to, you know, get the network in, work on getting all banks, etc., to accept it. And then even then it would just take a long time, and most people would just want to use a Visa or MasterCard. They wouldn't, or American Express.
Yeah.
even now people don't like using American Express because the fees are higher and it's just more convenient to use Visa or MasterCard.
Well,
Which is why it's funny.
Mhm.
I mean, I know they're saying debit card, which that's why it's such a funny.
It's not credit cards. Yeah.
Yeah.
It's debit cards.
Because like American Express, if you were gonna have to if you're trying to go after them on credit cards, which you could argue makes more sense, but the issue is Amex gouges way more on credit cards.
Mhm.
So I think the lawsuit's kind of silly, but
No, and Alaka's pointing out the point. So what I was talking about is like they do this. They do like exclusivity discounts and bulk volume discounts. So those are the prices I stated are without the discounts included. So that's why they're lowering the price a lot if you just exclusively use them.
duh.
But not duh.
Like,
No, and it's not even going to be a bit. It's not a big hit at all to them. So it's like, let me actually find out.
isn't that proof they're not a monopoly though? Because is the DOJ saying they're a monopoly, or they're just doing? Because if you have to give someone exclusivity and volume discounts, then by default you're saying that there's competition.
Yeah, but they're saying that destroys competition.
Aren't we seeing this everywhere? Isn't that the whole thing? Like,
I love this.
Is that what happened?
Yeah.
I didn't look at any of this. Whatever happened to Elon's P2P payment system? He said it was supposed to be out this year. Does that mean 5-10 years from now it's never going to come out? To me, here's the thing. I think that this is overblown. I don't think this is going to be a big issue on Visa, on their profitability, on their forward earnings, anything like that in the long term. But I still don't think Visa's that attractive here.
Mm-hmm.
I don't think it's unattractive. I don't feel like it's a terrible hold here or anything.
I don't understand the people's, by the way, talking about P2P platforms. I don't understand why people think that's a threat to like networks. It's like it's replacing wiring. We wire each other or just handing off cash to someone else.
I don't think people understand how when I say the rails and how that works. Like the peer-to-peer is
still operating on their rails though.
Right. What would peer-to-peer cut out? What would cut out? It would be
it would be a replacement to me handing you cash. It would be a replacement to me writing you a check. It would be a replacement for me for sending you a wire. That's what it replaces. If I'm giving you, Andrew, money, well, Zelle offers that, by the way, but like that's all it's offering. When in the past did I go up to you as another person, a peer-to-peer, and I said, "Oh, I'm gonna just swipe my credit card on your what?" How am I gonna? You're like, "Hey, Fabio, can I borrow $20?" And I'm like, "Sure, Andrew. Let me swipe my credit card on your." Some people are having a laugh at that. They're like, "Please go on." Swipe the what?
He meant my armpit, guys.
Yeah.
Another gutter.
Like what? No, in the past, I would just say, oh, I'd go into my wallet, I'd grab the $20 bill, I'd hand it over to Andrew. Now he has $20. Peer-to-peer is basically something I can use Apple, and I say like, oh, okay, sure thing. Funny enough, because I don't carry a balance in my Apple Wallet. That's because I think that's kind of silly. I use my credit card, and I basically put money in and then send it, or if I want instant transfers, I can have money in there, but then I can send it to you. That's what the convenience has been. So
don't you think that
you have Android, I can't do that to you.
No, you get Venmo.
So we have to use Venmo or Cash App
or Zelle.
Let's ignore Zelle. We're talking about peer-to-peer. Come on.
Oh, peer-to-peer.
We already know that there's no reason to use the peer-to-peer guys, but yeah.
Well, the thing that's funny to me is I think that the term peer-to-peer is like such a goofy term to begin with. Everyone's like, because I feel like that's something like crypto uses a lot. I'm like, they're like, oh, a peer-to-peer system. I'm like, well, what other kind of system is there? Like a peer to not peer? Like I don't even understand the concept.
I see what you're saying, because we're still using something, and there's still two people interacting. in
any
any case.
payment's a peer-to-peer system.
Yeah.
So just
Yeah.
the term itself to me is kind of a
Yeah.
it's redundant. It's
No, yeah, 100% agreed.
So Alpha Fun asks, would payment processors like Square, Toast, and PayPal benefit or not from this antitrust lawsuit, and how? They all use Visa.
I don't
Or
think the
MasterCard.
gateways really have anything to gain from this. It's the argument is the merchants, because the gateway is not paying any of this. So, if anything, remember Toast takes also a cut of every transaction too. So does Square. That's part of their payment model. They do like a monthly subscription plus a percent of transaction, and then that's how they generate their revenues. PayPal is also taking a cut of its transactions. So if you want to do transfers, like for example Venmo, it takes a cut every time you want to send money to your checking account faster. You'll have to pay them. For PayPal itself, if you're a merchant and you're collecting, on top of the credit card fees, PayPal will take a cut. And same thing with, Braintree. So they're just taking an extra cut on top of this. I don't think it's going to benefit them because they have nothing to gain if Visa just charges less.
Okay.
So basically,
can I send
yeah.
you this?
Yeah.
I think this is a decent diagram. It's not perfect. I think seeing a diagram and understanding, because people are asking questions, I think that are kind of like somewhat going around. I think this is a decent. Can you pull it up? Or are you not able to?
Oh, wait. Did you send? Oh,
Private
you sent a
chat.
private chat. I was
Might
looking
be.
at my DMs. Yeah, we can share this. You're talking about this image here.
Yeah. So basically, I think within this, Visa is the credit card interchange, right?
Mhm.
And so basically, if you look at this throughout the whole process, you are always going through the credit card interchange. It doesn't matter what you take out and what you put in to get to process a transaction. You have to go through that interchange. That's why we call it the rails. It's just how things it's the actual processing and confirmation of the entire transaction.
Yep.
It's
It's probably also, just to reiterate, it's probably one of the cheapest parts of the transaction.
Yeah, because if you think about if there's a 3% fee, which sometimes happens, I don't know how much there are on debit cards. I don't know what their credit card fees are. I want to say 0.5, but I could be wrong. It could be lower than that. It's still nowhere near the largest part of it. So,
yep.
If you want to ask why does a credit card issuer give you a 2% cash back or a 1.5% cash back? Because they're making more than that.
Yep.
But this answers, you have the website where someone pays, you have the payment gateway. So when we're talking about gateways, the gateways that'd be PayPal.
Mm-hmm. Toast.
See, I'm not as familiar with Toast, but I'm assuming Toast is the same. Yeah, because you pay on a Toast.
This is an e-commerce
Apple
example, but yeah.
Right. Apple. Apple Cash is a gateway. All those things.
Square, yeah.
So they
Stripe.
They work in conjunction with Visa.
Mm-hmm.
So they are not replacing Visa. It's a separate part of the process. It's, it's kind of like saying you have a really, we'll stick to this. I'm not going to use an analogy, but
it's another layer. So you have just another layer on top of it. They're providing a different kind of service in this whole relationship. So like, I'll give you an example, something I'm somewhat familiar with using, Stripe. So Stripe is fairly good for setting up and handling all that credit card transaction information, customers' credit card numbers, emails, etc., account information. It's really good at handling all that, and then you can organize the data on your back end and kind of do some data analytics if you'd so like. But enables you to do all that instead of like, because how else would you necessarily do it? You need someone to provide that service. Now, all of this is definitely like a race to the bottom because you're really trying to go for who's going to take the least amount from you, especially like white label products, because the customer is not going to know the difference. It's really going to be what are you going to stomach as far as like the way the layout looks like, how quickly do they pay through, et cetera, et cetera. Maybe they have some weird policies about, how the customer can like, charge back or something like that. So that might change a merchant's desire for an e-commerce platform, or, when you're choosing your POS system, the different, sometimes some of them have a higher subscription, a lower take rate, higher take rate, lower subscription. So that's all going to be like the differences that causes someone to, change system. But for the most part, you need that service. You need something. So I can't just magically collect payment from the credit card. I need something to do that on my behalf. If I'm a restaurant, for example, when you go to your restaurant can't just grab your credit card and just like magically money goes into their account. There's got to be someone on their end that's processing it and then kind of taking inventory of what you're ordering, what you're absorbing, right? And then paying for that based off of the prices they set in their system. So it's handling all that on their behalf. And then, the tips, making sure the tips go out to the right person, et cetera. And it's all organized. So that is a necessary service. So I hope that answers your question. Out for fun. Square, Toast, PayPal, I don't think it affects them. It's just another layer. It's a completely separate part of the system. I really disagree with the DOJ's opinion here, but what do we know? What does it matter? Because I just don't think if debit card price or take rates change, that it's going to actually have a material impact on the prices of goods.
It won't affect anything at all.
Well, I wanted to throw in Google into this conversation as well, because Google is having its own fight with the DOJ also for themselves. And, it's kind of like, oh, Visa's like first time. It's like that gift, first time.
If what is the DOJ's against? It's just it's a walled garden attack, basically, just saying that they're a walled garden. And
yep, for their advertising, their sell side of the advertising.
Is it Project Blue? What was the one? What was the one that Project? Is it Star Wars Blue? Hold on.
What is this referring to?
Google. And this is back maybe 15 years ago. Basically, it came out that they were, in some cases, like 10 years ago, were actually. So basically, within the RTB process, real-time bidding, they were basically, so the way real-time bidding works, it's kind of weird. Normally it goes to the person that's the third highest bid, and they were like assigning it to the person with the second highest bid and saying they're the third highest, so basically making people pay more.
Why don't they go to the highest bid? What's the reason?
I think it's because you don't, my guess is they want to control cost, because there's also cost being passed on to like the rest of the ecosystem. And so if you're a malicious player, you could use that to like kill people, essentially, like kill businesses and stuff by making them pay too much for ads. So if I'm a malicious actor, I could go around and like bid up and make you bid really high. Also, this is all done by algorithms, so it could be just to kind of siphon out, because you don't want outliers to be pushing up prices on things. It's basically just to control like cost. But with Google, I think there's a better base than Visa of accusation. Do I think anything will happen? I don't know. I think Google would be very happy to spin off their sell side platform, because that thing isn't maybe I'm wrong, and maybe it gives more information, but SSPs are pretty valuable.
Imagine the multiple it would have.
It wouldn't be very high. I guarantee it would not be very high.
So then would it be a cash cow spitting out tons of cash?
So if you go to Google, go to the most recent 10Q.
Yep. Okay, I'm almost there. Okay, and pulled it up.
Because they break it up by business line, right? Actually, might be easier to do the earnings release. I'm sorry, Fabio.
Oh, earnings release?
So I think the earnings release, it just, you can go right there and it pulls out. Yeah. It'll have everything there
Okay.
on like page 2.
Okay, I want to pull this instead.
Okay.
Bring you back.
What part do you think the SSP is in here?
By the way you said that, Google Network.
It's Google Network. It's within that.
Yeah.
Um,
So they're saying they are monopoly because of this.
Well, no, what they're saying is they're a monopoly because you have the DSP, which I think the DSP is within Google search, which is DoubleClick. You have the SSP and you have the search. So basically, I want to sell an ad on Google, right?
Mhm.
The only way I can sell an ad on Google is through Google. I
Mhm.
can't go to the trade desk and sell an ad on Google. I can't go to Meta and sell an ad on Google. And so the argument is because of how large they are, because of how widely used they are a monopoly within this space. And, you know, they also have the fact they also have YouTube, and I'm assuming YouTube works the same way. I haven't looked into that deeply.
So Trade Desk can't do business with Google or inside of Google. They have to go to Meta. They can do it with Meta though, right? Because doesn't have this. Meta doesn't have this issue.
Let me see.
I don't think Meta has the SSP and the DSP.
No, it is. It is. It does have its own SSP.
It does? No, but I don't think it has both.
According to, well, I'm doing a very quick Google. It says it sells its own inventory, which would mean that it has an SSP, and that it controls the price of ad slots. I think Google or Facebook's a walled. I think there's 3 walled gardens. I want to say it's Amazon, Facebook, Google, Meta are like the walled gardens of the internet.
Okay, so then this would set precedent for them coming after the others. Then.
Correct. And you'd have to look at the nuance within the argument, which I haven't looked at that closely. But yeah, I mean, essentially, that's a bigger risk for Meta is that whatever happens here. Now, that's not priced into Meta. And the argument, I don't know what the argument would be. It could be that Meta only is on Meta, and so it's like, you know, whereas which you could say Google's only on Google, but Google's a search engine, whereas Meta's a series of social media.
Mm-hmm.
So maybe that's where the difference comes in, and why people don't pay as close attention. Like, let me see. I'm going to look at Trade Desk because Trade Desk, and that's why the Trade Desk is such an interesting thing. So now we're going down like my ad tech rabbit hole, is because the Trade Desk is the gateway to the open internet.
Mm-hmm.
So then adds like you have the walled gardens, which is Meta, Google, Amazon. Amazon, maybe. You could maybe, I don't think Microsoft is. So those primarily. Trade Desk is the gateway to everything else. Now they're only a demand side platform at the moment. And so, but that's why if you go to their earnings calls, they'll say that they're basically the largest thing on the open internet, and that's what they mean by that. Is that it's not within all these walled gardens. As far as the actual situation with Google, I have not been paying attention to what's going on with the DOJ and Google in the back and forth. Have you been following that?
No, I have not.
I'm just trying to double check to make sure I'm right on.
Yeah, because there's still the ongoing court case, it seems, for you're talking about just to be clear, you're talking about the Meta one, right? From 2020?
No, I'm talking about the Google case.
Oh, because there's a Meta one too.
Oh, is there? That's
Yeah,
ongoing
it's
still?
ongoing since 2020, I believe. Doesn't say it.
I would argue, though, the thing with Meta is that I think that the uniqueness of Meta is within like its websites themselves and people
no,
wanting
here
to
it
be
is.
there. I don't know.
No.
So they're saying Meta and Google are the two walled gardens, as what Trade Desk is saying.
Yeah.
See, but that's so. The difference is Meta is a social media conglomerate. Google is a search engine, and so old reference. If you ever seen The Interview, which is like Seth Rogen and it's like different but same. Different but same.
Yeah.
That's kind of like how I feel about this right now.
I think Trade Desk, of course, they're going to say this because it just their butt hurt.
Trade Desk is turning to their own walled garden, though. They're doing it very sneakily, which is very interesting. But they are becoming their own walled garden.
How so?
They're making a sell-side platform. They won't admit that they're doing that, but that's exactly what they're doing. So, which is why people like them so much. So, if you, we're gonna go down this route. Okay, we'll go down this route.
We're already here. We're going down the rabbit hole.
So let me pull up the Trade Desk right now.
All right.
So it's going to take me a minute if you want to talk about something while I pull this up because.
Yeah. All right. So while he's pulling that up, let me actually check to see how we're doing on the. I can talk briefly. iPhone sales. They are not doing so hot. Last I checked, they were down in the mid-teens year over year, mid to high teens, I believe. And so I think that a lot of people were expecting some sort of, upgrade cycle. I myself was among them, but it looks like there isn't going to be one for the foreseeable future. This is based off of shipment volume on iPhones. Lincoln says iPhone 16 is ass. Are people giving it bad reviews? Because that'd be interesting.
Give me more bad reviews.
The new iPhone. I will say I haven't been tempted before to get an Android phone, but the Pixel tempted me. It's tempting. It's one way to say it. It's tempting. And to be fair, I mean, I think that whole green bubble thing, it's kind of going away. There is like an update where if you react to someone using your iPhone on Android, it'll give you the proper reaction now. But then when you do the other way around, now it's iPhone that just says like so and so laughed at an image or so and so hearted an image. So fuck the Pixel. Android is gay. Part of me is the whole company being AI focused for Wall Street, but the new hardware shipping so unfinished without AI. Yeah, that is, yeah. And to be fair, the new Meta reveal was very exciting. I'm very excited just for what comes about with that. That they have the form factor that we were discussing. They showcase like a form factor kind of like this. You guys can see it. And it looks like that is the direction they're going to go. So eventually, we are probably going to have some sort of product that's going to be, pretty decent size. They're going to work on making it thinner and have a little bit more juice. So. Yeah, that's and also the other part that was really exciting was like the wrist sensor. I saw that that was a showcase back in I think 2022. Mark Zuckerberg had like the first version of it, and he was using like his thumb and fingers to kind of move the mouse around and kind of interact and playing games and making sure that you could basically, without having the camera see your hand gestures, you could actually get some let's call accuracy with those same gestures. So what I'm excited for is as far as like society, the implications that has for stuff like prosthetics. So while before we were getting better and better, but this looks like it could be an interesting breakthrough. And that's something not really on a consumer tech side, more so medical technology side. So and sometimes throwing R&D capital at something, and a company like Meta might come up with different inventions. How in the past we've had projects, not we, but the United States has had projects where companies have come up with things that they didn't expect to come up with, and hey, you can actually make a decent return on those too. So we'll see. But what I really liked is they showcased the use cases, which if you guys go back to the old Meta videos, that's kind of what we said. These virtual reality glasses, if they went in that direction, would be very attractive from a use case, like in the workspace, and not needing monitors anymore, but instead having your main PC compute power and then being able to just create as many monitors as you so wish. And if they could get it into a very nice form factor, then we're in business. It doesn't necessarily have to be wireless. I think people would be fine with a wired. And then I can have, instead of these monitors I have in front of me, I can just start creating as many monitors as I wanted. Maybe I want 3 monitors that day, 4 monitors that day, depending on what my work needed. So more monitors, the better,
That's it. Okay.
So that's something that you don't really even need that to work out for Meta. I'm not selling a single share of Meta, if anyone's wondering. So I have, as club members know, I have the calls, and I think I've mentioned it in the past. I have sold covered calls on Meta for the strike of $800 a share by November, and I did this in June, and I got like a pretty good amount of capital from that. So Fuhat doesn't like the monitors, short monitor companies. Yeah. I thought the wireless external compute puck was really good idea. Yeah, that was another thing. So it's
So
outside of the box.
okay. I'm ready whenever you are to talk
Yeah,
about it. Okay.
Let's talk about it.
So I'm gonna send this to you in the private chat. I sent one thing, but this one's the more direct thing. The OpenPath. Okay. So what is OpenPath? And does it do the little thing here? Okay. OpenPath gives our clients a simplified, direct connection to participating premium publishers across the open internet by supporting an objective, transparent supply path. And it simplifies the supply chain. So, Fabio, how do you, if you're a DSP and you're working with a publisher, how do you simplify the supply chain? you get rid of the SSP.
Yeah, I was gonna say make an SSP.
So no, they're not making. No, they're not making. They're just simplifying the process, Fabio. They're not competing. They're not making it. They're just simplifying the process. Okay?
Oh, I get
They
it.
are not a sell side.
I understand.
So, yeah, like they say efficiency by eliminating unnecessary steps in the supply chain. They're helping you lower costs because they're cutting out other SSPs. So, and I like if you actually scroll down, they have like a 1.5-minute video. And you can play that really quick and only need to do the first 10 seconds because they do a very good. They show it.
Easiest way to think about OpenPath is just the most direct connection that the trade desk can have with our premium and strategic publishers.
They're cutting out someone. You're a DSP. The other side's an SSP. So who are you cutting out? And they'll be like, no, we're cutting out a marketplace. We're cutting out inefficiencies. You're cutting out SSPs. And you're not saying this, but you're replacing it with your own. You know what else they're doing for CTV?
Who?
The other link I sent you?
Okay.
They're creating their own smart TV operating system.
What?
So if you have your own operating system, you have the inventory. And if you have the inventory, you're the one that's looking for, you're making your own YouTube. I mean, right? YouTube is an operating system that's owned by Google. So my point is, they're becoming their own walled garden. It's going to be slow. It won't be like, it'll evolve slowly over time. And they'll never say they're a walled garden until everyone already knows they're a walled garden.
How is that going to work for them? I don't. They're going to make an OS, and everyone's going to go, "I want the Trade Desk TV."
I don't know. Maybe
because there's people who love their Rokus. I don't get it, but they do. And there's people like me who is like, dude, I have Amazon everything. It's so easy.
What if you're Samsung, you don't have your own operating system and you want to compete?
I literally don't care. I'll buy a TV and I will buy the Amazon Fire TV Cube.
Well, I do the same thing. That's what me and my wife, we have like 3 of us.
You shouldn't buy a smart TV, by the way. Fun fact. You know why? They're literally built to be, they're built to die eventually. And so it's just better to have that compute outside of it. And then you replace that if that ever goes bad than just buying a new TV over and over again. If I have a smart TV, I'll still just like buy the box.
Right.
Which I currently have a smart TV, but I just bought the box. So.
But that's why I'm just saying, I guess the point is you're slowly having, and this is why Trade Desk has such an insane multiple, by the way. People know this. You're creating the next walled garden here.
Mm-hmm.
Now, the issue I have is like, I don't know if you can be a walled garden if you don't control the website. Their play is all the conglomerate of all the websites of the internet are too small that are not Google and Meta, that it doesn't matter.
Mm-hmm.
Basically. I don't know how I feel about that. So I don't like the valuation because it's really expensive. Amazing company, though.
Mm-hmm.
And I always knew and the other thing, too, is like they got tight ties to everyone who's important. Yeah, I mean, they're trading at a 70 times forward free cash flow, and they do a lot of SBC. So I think they're forward gap EP or forward.
Their earnings is like nothing.
Yeah, they're like at over 100 times gap.
Yeah, which makes no sense. I don't know what a Trade Desk investor thinks. Like, what are they thinking in terms of their return? They think that the earnings are just gonna climb like crazy.
They're saying, what if I get the next walled garden? What if I have the next Meta or Google? There's two
but you
real.
Never paid that much for Meta or Google.
I'm not disagreeing with you. I'm not. That's why I don't have Trade Desk, but I think that's what they're thinking. I mean,
so yeah. I don't know.
Yeah. So, but I think it's interesting just to know that and know what's going on there. Yeah. So that's that. I mean, going back to looking at ad tech, my my good times. But someone's comparing it to Crowd. I think Crowd has a longer runway potentially, although I would say right now it's similar to, and I don't want to get too much hate, it's similar to Palantir. I don't know what a Palantir investor is thinking right now.
In terms of, because what you're
Valuation?
paying for for the forward earnings is insane.
Let me see what they're at right now. They're at Palantir's at 94 times normalized earnings, which means you're not taking into account SBC. If you go by, I'm going to give you the multiple of 2025 GAAP EPS. Okay. Let me just do this real quick. Let's see. What do you think they're at GAAP EPS wise? What do you think the GAAP price to earnings is for the 2025? Not 2024.
127.
155.
Damn.
Now, obviously, I'm sure they'll be able to grow that super fast. Although analyst estimates are not that fast. You're talking like 40% CAGR. Or not CAGR, 27% next year, 40 after that, 39, 28. They're like sell side estimates are only at 61 cents by 2028 of GAAP EPS. Now, sell side could just be wrong, and maybe they'll earn a lot more than that. But to me, if I'm looking at this, I'm like, holy shit! Like, what are you thinking here? But we'll see.
Yeah. The multiple just keeps expanding and expanding for Palantir. So investors are just willing to pay more and more for the same dollar earned. And the forward growth is not like 100%, is it?
No. The forward GAAP, you're talking about EPS growth?
Yeah.
So this year's EPS growth is 100%, but you're going from they were EPS negative in 2022, just hit it in 2023. Now it's 100% growth. Forward EPS growth looks like 27%.
Okay, yeah, because what's the top line growth?
20%.
Yeah, it's not, doesn't add
now,
up.
Right. So like you would just have to be, your assumption has to be that sell side's way short.
Yep.
On their estimates. That's the only way that makes sense.
Yep. And by the way, for this question, good question. I'd say if it's a savings account, yes, keep doing it. But
so yeah, so that's that. And honestly, at this point, depending on where you bought Palantir, it's crazy. I'll never forget how crazy Palantir was at this level in 2021.
Yeah, I know. Yeah.
And oh man, 2021 was a crazy time.
Mm-hmm. Oh yeah. Crazy time.
Yeah. So, do you want to talk about what's next? Did you talk about Apple sales down while I was in
Apple? I mentioned it, but we can get back into it a little bit. So, how do you feel about that? Because the iPhone sales, it's just it's not looking too hot right now.
It's about damn time y'all realized Android master race,
which is Google, and you hate Google because you're shorted. He's not shorted. I'm just gaslighting. But it's funny because this rally here was like the belief that this new cycle was going to be huge. Because remember, Apple's bread and butter is iPhone.
It went up how much from May to now?
Well, you go from April to make you feel worse. 37%.
Wow.
That's
I guess it was down year to date before that, so it's kind of like.
Wow. Yeah. Yeah, before it was, let's see, it was, didn't start. Whatever, close enough. 10%.
I've never been a person that's been big on Apple. and I've been wrong for many years. So that's kind of like, and I'm sure Apple's outperformed me over the time I've been investing. So, I'm clearly an idiot, and that's fine.
Oh, they grew a lot, and then the multiple expanded.
Yeah, when they went to services and like.
Mm-hmm.
Fair
Well,
enough.
there's still, I think the services are still just tied to their install base.
Yeah.
So if their install base does get hit, then services will also get hit too. But Apple is getting features my 3-year-old Samsung has had, and a 10-year-old phone. Wow.
But
yeah,
well, that's the thing about Apple that I don't know. This is what you know. I mean, let's be honest for a half second. Like, I know I joke Android master race. Apple phones are way better than Androids. Like, there's no doubt about that.
really,
They run better.
that?
Yes. Everything runs smoother. Yeah, like they run bad after a while, but so do Android phones. There's some cool phones that Androids have, like the flip one. It's like it's a smartphone, but it collapses in half. That one's kind of cool. But like, yeah, I don't. I think Apple phones are by far the best. I don't think it's a competition.
Okay, I mean, I've heard from a lot of Android users say the opposite. I mean, obviously, they have Android.
Mm-hmm.
Well, you say that, then you don't have one. Is that because you just don't want to pay the Apple tax?
I'm just cheap.
Okay, yeah, no Apple tax, yeah. But you even think like the flagship Android phones?
I have a question.
Mm-hmm.
Mr. Retarded on dividends. Why are you hating on me?
Flavor of the day.
I'm like that guy. There's like those videos of like people are in a fight and there's like one guy walking and it's like turn around and punch him and you're like, and then everyone moves on. But anyways, so I'm just cheap. That's why I don't like. That's why I don't get Apple phones.
We're gonna get into a bonus topic that I alluded to.
Well, and the other thing too is, so when I was, Andrew, no, I hate on you because you're a self-righteous bigot. All right.
That's a great reaction. All right. All right.
Oh man, I killed Fabio now.
Oh. Okay. Fuck. Oh my god.
Oh, the comment didn't even show up on YouTube?
Yeah, YouTube blocked out automatically because Oh, okay. All right. What were you gonna say?
We were talking about Apple?
Yeah.
Oh no, so what happened with me was when I was, so I didn't even, like, my parents couldn't pay for me to have like a smartphone. I didn't have one until after college when I could actually have a plan.
Mm-hmm.
And then, so when I got my first smartphone, first job out of college, you don't have money, so you get like the cheapest phone you can. So I've just been in the Android ecosystem. That's part of the reason I've.
Okay. You just got used to it and stuff. Yeah. I'm one of those, like I said, I'm not proud of it. No, you know what? Fuck it.
No,
I'm an Apple shill in that sense. I signed up for like the Apple iPhone program, so it's like with Apple. So technically, I don't even own the phone. It's like it's just leased, and you just upgrade it every year.
And for out for fun, just for context, I didn't have a Google Pixel. Okay, when I first got out of college, it was like I was on Cricket. Okay, Cricket Wireless. That was, if you've ever been to a Cricket store, you get cheap phones.
Okay.
And the phone I have now, I mean, it's fine. It's like an Android. It's not like an expensive, super expensive one. It's probably like mid tier, but it's fine. Works for me. So that's all it is. But yeah.
No, okay. Still have my Apple iPhone 13 from 5 years ago. Works about 90% as well as the day I got it. And the things that decline most is battery life. Yeah, that is something that with the whatchamacallit, iPhone upgrade, whatever, you get to replace your battery. I think it's after it if it goes below 80% of its health. When you see like battery health, if it's below 80%, you get to replace it, like the battery.
That's pretty sick.
Yeah, but every single year when the new iPhone comes out, you can just go in, walk in, and get the new one. And you automatically are enrolled in the standard iPhone insurance, Apple insurance or Apple Care. I have the second one, the one that people can like. You could get your iPhone stolen, and it's covered, completely destroyed. I think twice a year, and it's covered. So, but the bonus topic. All right, the bonus topic is a little saucy. Okay, it's a little saucy. So, I've been hearing rumors on the street. I'm on the streets, Main Street, not Wall Street, Main Street. Berkshire Hathaway is a short. It's a tweet you shared with me the other day. There's people saying out there that Berkshire Hathaway is a short because Todd Combs took over Geico, and he made a comment saying Geico is like 10 years behind Progressive.
But wasn't Todd saying that like when he took it over, it was 10 years behind? Like, which is recently.
Believe so.
Like he just
believe so. But then there was actually a short report on Value Investors Club saying that Todd Combs is incompetent. And it went through like, it was basically the most epic roast of Todd.
Which is, I think Berkshire as a short is beyond idiotic. It could underperform, but I don't think this is something that's going to like go down greatly. It could just
honestly, we should buy puts on BRKA.
Oh yeah, I have money for that. Be right back. Does that even have an options chain?
No, I don't think so. But could you imagine, guys? I bought puts on Berkshire Hathaway. Which the B's? No, the A's.
Let me see options.
Let
me see if there's an options chain. There is no. Oh wait. Yeah, there's no options on it.
No, there's not going to be on BRKA.
I didn't think so, but sell calls like Paul
on BRKA. That one could do okay. I think there's near zero chance that Berkshire goes parabolic like Nvidia does.
No, so, for sure.
I'll say that.
The upside I think is limited. I've never been a big fan of buying Berkshire stock. Like, well, I'll say I haven't been a fan of doing it the last few years. It's done well. I mean, it hasn't done bad. But me personally, I'm just kind of like, sometimes if I buy Berkshire, I'm like, why don't I just buy the index? That's what it feels like sometimes. It's another way to buy an index, you know?
Mm-hmm. Well, but
really shorting it on Todd?
Well, they're saying because he's going to when Buffett's gone, he's one of the two money managers, and he doesn't understand why in the article he doesn't understand why he was chosen for the role because his background is really lacking. Ted actually has something going for him. He turned 70,000 into $200+ million. But the other guy had a fund that underperformed and then joined Berkshire, and they claim that he just basically like wooed Charlie Munger and then got the position. And also he's doing all these things at the same time while being the CEO of Geico, and it claims that there's no way he can be good at all of them at the same time.
Yeah. So it's kind of like the issue like Jack Dorsey when he was CEO of Square and Twitter.
So it's like
you can't do both.
Geico is the crown jewel of Berkshire Hathaway. It allows them to do a lot of things. If that starts to lack or slack behind, yikes.
So I just think, though, that, I mean, like you said, if Geico slacks behind, oof. But I feel like there's so much set up within Berkshire that I think it'll be okay. I think as a short, that's kind of stupid.
Nowhere.
I think there's so many better shorts out there. You can find so many stocks that you're like, why is this trading here? Or why are people bidding this up? Or like, this is not going to do well.
What do you think Geico's worth by itself? If we were to cut out Geico,
do they give metrics on Geico?
Let me find this out.
I mean, to be fair, the other thing is like, I think some of Buffett's buys have been very suspect. The Oxy obsession is kind of odd to me. What are the other ones they've done recently? They've gone big on. He's done some things that are, I mean, I don't disagree with him necessarily selling some Apple and some Bank of America, although Bank of America is kind of weird because we.
It's actually not that much. What,
how much is it?
It says that they had a pre-tax underwriting gains of $3.6 billion. So that would equate to like a net income of $2.8 billion. I don't think that's gonna be. It's hard. It's hard to tell.
Yeah, net income of $2.8 billion.
Yeah, that would make them much smaller than Progressive already, which means
yeah.
Progressive is
So
just like devouring.
If you just slap a multiple now, if you put like a 20, what's Progressive at? Like a 25?
See, it's tough, but yes, right now it's at a.
Yeah, so you'd say they're like 50, 60 billion. Oh no, Progressive is way cheaper than that.
Yeah, no.
Progressive's at like a 19 forward, 20 forward.
Yeah, no. Look, Geico. I'm looking at another source from Carrier Management saying Geico had a $3.6 billion pre-tax underwriting profit, which translates to a 90.7 combined ratio. Yeah, that's actually way smaller.
Underwriting profit, though, are they not including the carry?
Yeah, they're not going to be including the carry. That's going to be under Berkshire. Yeah.
So that's a big factor, though, because you make a lot of money from your carry. Not like a ton of money. I mean, what?
No, yeah, the majority is still going to be because like Progressive actually has a relatively small portfolio for their size. Theirs is like standing at 60 billion, just under 60 billion now. I mean, it's growing, but yeah, they have a bond portfolio that's about 60 billion right now. And it's growing really rapidly, actually. Progressive's portfolio is growing rapidly, more recently than before. So.
Yeah, so I don't know, maybe 50, 60, 70 billion, somewhere in there.
Yeah, so it would be half the size of Progressive, which pretty sure they were neck and neck before, like way back when. So it looks like progressive consolidation theory is
Well, I don't. I always think that when you're a company and you're based on one sole thing, like, yeah, there's a CEO of Geico, but he's within Berkshire. When your whole company is focused on just that, you do have a concentration of focus to drive that better. But
I'm trying to see what get progressives side by side. So they're not in 2023. Yeah, it wasn't that. It actually wasn't that different. So about income before tax, 4.9.
okay. So are you just trying to say, like, because you trying to understand like what the,
I'm trying to understand if we're seeing the deviation between the two co's right now.
Mhm.
Not really.
I thought it was more of a Berkshire question. That's what I was asking.
No. Guy, because the question is like people are talking about Geico being behind Progressive, and then this guy on Valley Investor Club is saying the CEO of Geico is the main reason why he thinks Berkshire might be a short. On top of the fact that someone mentioned it, Berkshire's trading at an elevated price to book to its historical average.
I mean,
So
well, to be fair, the S&P is trading to its historical average, so it kind of makes sense that one of the biggest holdings in it would too.
mm,
I just think, okay, so the good thing short is like this thing's not going to just rip against you, you know? You're not going to wake up one day and go, oh shit, it's up 40%. Um,
or 1,000% in 2 weeks.
yeah, nothing like that.
Yeah.
Yeah.
And hey, 4 days. 4 days, Andrew. It's a magical
I have puts.
day in 4 days.
I have puts.
Oh, I do too.
Yeah.
I was trying to get more. I was trying to bid at 5 cents on.
Oh, you went for the Octobers?
Yeah, dude, fuck yeah.
Well, because you know, if what doesn't happen in 5 days doesn't happen, the saving deal is off.
Yeah, no, the whole thing that it will go. Yeah, exactly.
So
I was trying to bid, but I couldn't get a fill. I'm trying to get some at 5 cents.
I check their SEC filings every day, and I'm like, nothing. Like, are they just gonna like one day just be like, boom, 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 here's everything? Okay, like it's so weird. And I think even if they did that, people would be like, oh wait, this is what's like the status of the company. So moving on.
I'm trying to Google something because someone
I
said
would-
there's something with Berkshire Hathaway and Meta. I didn't see anything.
What did Zuck come out and be like, I love Warren Buffett? Be kind of weird. Okay, so to me, it just seems like a kind of an odd short, but
Yeah,
hey,
very, very odd short. There's other things out there that could definitely be shorted.
like, in fact, here's what I'm going to do. I'm just going to go through the S&P 500 index top holdings, and I bet you I can find a short faster. So you got Apple, Microsoft, Nvidia, Amazon, Meta. Okay, you have BRK, Broadcom, Eli Lilly, Tesla, JPM, United Health, ExxonMobil, Procter and Gamble, MasterCard. Shit. AbbVie, Merck, Coke, Bank of America, Oracle, Salesforce. You could probably take the position that you think like the AI hype's overrated, and like you could look at going short like an Oracle or something, but like I I just don't like the thesis. But interesting. I don't disagree to say don't go long at maybe. You like and he could be right that on the sentiment of him changing, it sells off because people don't like the CEO. So that could happen.
Ooh, someone asked a question that's gonna really get us to dive into stuff and talk about it. But Celsius, look at that smile. Look at that little smile. It was so.
I warned you all. I said. Oh, you know what I've been hearing on Twitter? Alani Nu is a problem.
Yeah. Yeah.
Monster should have hired me.
Hey, you know who you are, who has the friend whose parent is pretty high up at Monster. You know who Andrew is. Come on, get him in contact.
I want to be the head of M&A.
Yeah. The person who was like, Lonnie's, that's not really our, target demographic. Andrew's response, do not want to make money.
So I looked at scanner data as of last week.
Uh-huh.
Up 6% year over year. Market share has flatlined 9.6 to 9.7. It's not.
That was a big part of your discussion. You kept bringing that up.
What?
That market share.
Yeah.
That you showed that back when Celsius was way higher.
Mm-hmm. Well, I said that the market share was deteriorating and it wasn't going to increase because. Yeah. And the other thing I've noticed is their promotion sales are increasing.
But isn't that? Oh wait, that still affects them because that's retailers trying to get rid of inventory faster, and it's not a good sign. Okay. Yep.
I can show you this, I think, or here. Let me send you this image. I don't think I've never heard of this being not allowed to be shared. I just sent it in Discord.
Yep. Pulling it up.
Look at deceleration.
All right. So open link. Share this tab instead.
Here, I'll send you another one.
And we have a question here. Do you really think it's going to die, though? I don't think we think it's going to die, but
trading at 31 forward PE. I mean, that's not priced for death.
No.
Yeah, so I don't think, and that's if forward estimates are right? So,
yeah. So if forward estimates are right, it's decelerating by quite a bit. So
here's the question, because what sell side has estimated is like it drops down to an 8% top line growth this year, and then reaccelerates to like 20% top line growth following years.
Mm-hmm.
Isn't I don't know why they think that. Maybe what their reasoning is magically jumps up to like 20% growth again. Maybe international markets, etc. And I said this too. It's difficult with something like this to break an international market, and sell the brand. Monster throughout all of its time, it would grow at like 12 to 15% just consistently. So 20% seems like a lot to me.
Yeah.
So I still think forward estimates are high in that.
And we talked about how specifically you emphasize this point a lot, that international growth is not just, international growth. Like Monster had to develop new brands and really go after different customer demographics in other countries, because it's just applying a Western normative American mindset to every market is not going to get you anywhere. Some markets you have people who are lower income and you have to make a cheaper product, but you can kind of keep your brand as the premium. And so in some countries, Monster can be a bit more premium side, but then they have other brands that kind of target the customer base that can afford the lower price.
I want to show you another image, by the way. That just to reiterate my point. No, Jake, you know this. Whoa, that copied weird. Hold on, let me just do a screenshot of it so it doesn't look so weird. I'm sure you know where I'm going to go with this, though. Okay. You got it there?
And okay, I see what you were. All right, so this put here, share this tab instead.
Ooh, that's fuzzy. Can't even make up the numbers. Huh. Weird.
What am I looking at? I can read it, but I don't think the audience can read it as easily.
You can't, but you have to go to the dollar share.
Okay, dollars are down here.
Yeah.
In your category, Celsius.
I'm sorry. Yeah. So you see Celsius starts at 10.4 and it goes down to 9.7, right?
Yep.
What does Alani Nu do? 3.1 up to 4.6.
Yep. And it's only going to grow because Becky is not going to be loyal. Kyle is loyal. Becky is
also props to Red Bull. They're just holding it there.
You know why? I think it's because Red Bull is the party drink.
I think you're right.
Yeah. So it's just like, yeah, you go. I don't think people. I mean, I don't know anyone who drinks a Red Bull just like by itself, like bleh. But I know a lot of people who I still don't like it either. I'm like, oh, everyone's you drink alcohol just to get drunk.
Yeah.
So, yeah, it's
yeah.
But Celsius, I will say I would take a Celsius over Red Bull.
The drink?
Yeah. I would. There's certain flavors of Celsius I've had. Like there's the soda Celsius. I think it's fine. I'll take I haven't had an Alani.
I've tried like 2 flavors of Celsius and they're both so disgusting. I just didn't try any others. Maybe I just tried 2 bad flavors.
What flavors did you try? Well, nothing beats this Monster tea. This Monster tea is like phenomenal.
Oh yeah.
It is horrifyingly good.
Let me see what Celsius I had. Oh, I think I had this strawberry guava, maybe.
Strawberry guava.
I think it just had like this aftertaste that was like, and I thought it was gross. So, anyways.
There's also like the concern about Celsius advertising itself as the healthy product. I think that's what Slurpees is talking about a little bit. And it's definitely not. It's quite the opposite. So I love how people are saying the Monster ain't that bad. It's just different. I love.
Have you seen the Monster in Guinness? Is it?
Yes.
Was it Monster?
I want to try that. Yeah.
Yeah, it sounds interesting.
What are the odds of Pepsi acquiring Celsius? They're trading at similar valuations, so that Celsius is growing quicker. Makes sense. They could. They could.
They have to pay a premium to today's price.
Yeah, they would like to pay today's price, maybe, but.
So if they'd have to buy them probably at like a 40%. You think would be what they'd go for?
Something that the shareholders would say yes to. Yeah.
Yeah, for maybe a 40%.
And Alaka brings up a good point. Do you think they would sell if you look into them?
I don't know, but I'm saying at a minimum you have to do like a 40%. And then you're paying like almost $10 billion. It's a lot of money.
Yeah, it's a lot of money. It's growing after we make the adjustments for the inventory. Let's say it grows at what we said, 20% plus, and it's trading at 30 times earnings. Maybe worth it. But then you have to pay a 40% premium on top of that. Just kind of throwing a number out there as to what they'd be acquiring. So
yeah. So, anyways, I wouldn't buy it here. Is the short bit. Okay, so yeah, moving on.
I think the I'll do like a fun segment. You don't have to say a specific name, but maybe a sector, something that you're really interested here right now, going forward over like the next 12 or so months.
A sector?
Yeah, a sector
that I'm interested in.
Well. Yeah, that you're interested in
over the next 12 months. I don't want to be vanilla and say financials. That feels like
what? Well, yeah, because then financials. What kind of financials? But we don't have to get into.
Yeah,
because people think financials is like, oh, Andrew's long.
Probably REITs.
Bank of America. Okay.
REITs, which is also vanilla answer.
Well, it's not a vanilla answer because not even 6 months ago, people would spat on that.
True. But I would say those two.
REITs.
The other thing, I want to say you'd have to pick the right ones, but I think there's some things where people like software's gotten killed.
Mm-hmm. Oh,
right?
yeah.
SaaS. Maybe if you can make a distinction on the right SaaS, you could do really well.
Well, Salesforce is back. Salesforce literally recovered. Yeah. It's back to before when it was just like, oh yeah, Salesforce is stupid and dumb company. No one knows what it does. Yeah. And I have, well, let me quote the exact contracts I have. I got to log into my account. Give me a second.
Yeah. So actually, someone's bringing up a good point. Defense codes are actually good here. Like nuclear actually, the nuclear stocks could do well. You could look at the nuclear producers, like the CCJs, UECs, things like that. You could also go by playing like the defense codes that have exposure there. So that's actually an interesting one too. Someone's saying oil. I don't know how I feel about oil.
All right, Andrew, quick question. Do you think Salesforce gets to $320 by November? Gun to your head. You have to say yes or no.
Say that again.
Stop it.
You realize what's happening, don't you?
All right.
Okay. All right. So what was the question?
No, the question's exactly do you think Salesforce gets a 320 by November?
By November? End of November?
November. Hmm?
That's a massive run up. I wouldn't put money on that.
No, I have money that doesn't, but
oh, okay. Because That's a 17% increase. That's a lot.
Yeah.
I
So
wouldn't go there.
like ever so often throughout the year, there's like opportunities that I find,
Mhm.
and I actually sold those around here. So I actually got pretty good premium. I am up 78% right now on those. It's pretty good. Pretty good.
78% on the contracts?
I'm up 78% on those contracts because they've
Yeah.
fallen 78% in value, and I don't think there's any shot that they're gonna get. And this is like the second year that we've been doing that for Salesforce. Yeah, I get like one opportunity a year, it seems, for some of these names. Because then I have the 800s for Meta by November. It's all the same date because there was this time in like June-ish, a little bit before June too, that they were all hitting new all-time highs. Amazon, Meta, TSM even. And I have like the 270 for TSM. I have the 800s for Meta, for my Meta position. And I have, I think it's like 280 for Amazon. Why not roll them? Oh, no. I'm let them expire worthless. Because, well, right now I'm thinking about Meta. Kind of, I could probably roll the Meta ones, honestly. Keep maybe the same strike. Go a couple months more.
Andrew thinks CRM is an easy money stock. I don't think that. I don't hate on CRM.
Yes, I could do that, Ben. And what I've been doing actually back when, and then Meta fell a little bit, and I was just bought more Meta shares at the premium. Anyway,
So to answer your question, if I want to take the spicy pick, I'm going to say nuclear stocks. If I want to be the one that I think is like the better, probably risk reward, REITs.
and then some of the financials that we've talked about in the club.
Yeah. Some financials.
Those are, yeah. All right, and I think I'm going to also not cop out and say this. I agree with you. Within software, unfortunately, like we were just saying, some of them have recovered. I thought Salesforce was really interesting. If Visa gets really low, that's interesting. We've talked about LVMH looking pretty interesting, or starting to look pretty interesting. And again, once it's like all rosy for LVMH, it's already recovered. It's not a something that it starts looking rosy and you're still at cheap multiple. So the one concern that I have for LVMH, of course, is like you have to investigate. I talked to the members yesterday about like the product mix changes and why that's actually contributing to their higher margin. So they have higher margins now, but that's mainly due to the shift in the products that they're selling mostly. So before, think of stuff like Tiffany's finished goods, these finished goods that are like jewelry, leather bags, etc. And right now that's actually coming down a bit in terms of sales growth. So Hermes is down, all luxury is down. But LVMH is so much more than that. They have, Sephora, which is a very successful makeup retailer. And, there's like a ongoing war between Ulta and Sephora. You ask around, different women will say different things. They're like, I'm pro Sephora, I'm pro Ulta, et cetera, et cetera. So,
Dude,
yeah.
I hadn't checked in a while. Burberry's now at 600 pence.
So can you say that in non-monopoly money?
I don't know what it is dollar-wise.
It's like maybe $1.
No, isn't the
I'm messing with all the UK
the British
people,
pound?
just like trying to get under their skin. They're like,
Dude, pull up Burberry right now. Pull up a chart of Burberry and just do max. It is an insane chart. Because you brought up LVMH and it made me think of this. Do max.
Wow.
No, you gotta do max. Max makes it even lower.
Wow.
Oh my god.
You're still up though, Andrew. Cope and Steve. Look.
I mean,
Still up 243%.
With a good divvy, I'm sure.
It's a 10% divvy now.
I'm sure that's a real
Is
divvy.
Burberry like, yeah, are they doing okay? I'm gonna go to the mall and check on Burberry. I'm gonna see if there's anyone in there. I'm gonna do on the ground research.
You should just walk in and be like, just look at the front desk person and be like, are you okay?
Are you okay? Show them the stock price.
Yeah.
How are you guys holding up over here?
So,
I came to bring some donations.
oh, damn. Alaka's right. VF
What?
Corp.
VFC.
I actually think VF Corp could be interesting here.
Yeah, I just kicked myself because I talked about it and then I didn't do anything.
Yeah, but it's not
We
that
talked
much.
about it over here. No,
dude.
look, this is painful because I was like, oh, it's his last stint, 51% ago.
He's got so much more in him. Look at a 5-year chart. Look at a max chart. This
Yeah,
is
but
nothing.
he sold a bunch of assets, so he's shrunk to grow. So we'll see what he does.
I think it could though. I think this is an interesting thing to look at though. Here, what's its forward multiple?
Forward multiple. I'll give it to you.
I'm pulling up right now. I'm trying to see.
I was too slow. I'm sorry. Don't hurt me.
I mean, a 30 forward PE, it is kind of expensive, but 20 times forward free cash
38.
flow. Yeah.
But there's probably like write downs on brands. They're
Mhm.
writing down the value of some brands.
Mhm.
No, it was right there. The CEO was pitching the stock a lot. So
Alaka's just like, can you pull up all the charts of death? He's like, pull up advanced auto parts.
okay. I think this stock is an obvious buy though. So just saying.
Who said that?
Because me.
Oh.
Because the PE is low. And if you look at O'Reilly is a 10 plus billion dollar company. It's like 50 billion. Therefore, they will get to that same valuation. So I'll rather buy them. Analysis complete. But no, in all seriousness, what a disaster. And then there was like this moment where I remember the value investors online were like, here we go. And then it was like, oh, here we go. Damn, that's crazy. From here to here, it's 50% drop. You always remember the percentage game. From here to
you
here,
can do max chart. Max chart is kind of shows like the rise and fall.
Damn, getting kicked back all the way down to 2009 levels.
It's tough.
Yeah. Well, hey, we're talking good about VFC. We think VFC is fine. I don't know about AAP.
What's Goodyear done?
Goodyear?
Elliott got out, right?
Yes. It's GT.
802. This is another one.
Yeah, these turnaround plays are hard, man. They're hard.
I thought it seemed like the management didn't want to work with Elliott.
Yeah. Let's talk about the tragedy of Ubisoft. This trash gaming company that is just failing on their potential. They have pretty good IP, and then they just keep failing and failing and failing. They do not understand their customer anymore. So honestly, what needs to happen, and they already did a delay of, I think it was Assassin's Creed Mirage. They need to do this delay on Assassin's Creed Shadows. But I don't think the delay is going to fix the issues that the customer base sees with the game. It's too late. They spent too much money. Skull and Bones disaster, Outlaws disaster, or is it Outcasts or is it Outlaws? Whatever. The Star Wars game disaster. I already mentioned Skull and Bones disaster. The Star Wars game was particularly bad because of the marketing budget. So this company has more employees, or I think the same or more employees as Activision Blizzard, but they can't fire them, or it's difficult to fire them because either the culture sucks at Ubisoft as far as actually being efficient, or it's because the countries they're in that make it difficult to fire. And you're structurally disadvantaged to other studios if that's the case. So you have a company with terrible ownership structure because the family controls everything, and the family is, I don't know what happened to them, but they lost the plot. It's evident in just what they put out. So I'm not. It's just. I think it's subjective at this point. It's not an opinion. It's subjective. So, what are you buying here? None of their IPs, I think, are exciting in the future. We did in the club. We did this play here. I mean, Emperor Sauron, if you're in the chat, you probably remember. We did this play, and Fuhat like doubted. But that was because we were buying the anticipation of these IPs. Not that the IPs even need to have to do good. It was a sentiment play. But now that all these IPs came out, they were all terrible. So imagine you could have been like someone who's like, oh, I'm not going to invest for the sentiment. I'm going to invest for the actual results of these games. And you got clapped from that same period. You got clapped. So I wouldn't, I don't think, I think Ubisoft is structurally challenged, and they might just take that crap company private at this point.
I've never really been a fan of holding for a long period of time any gaming companies.
They can be good. Well, let me see what Take-Two is at now. Because these guys, but they haven't really done much since 2017, to be fair.
I mean, and this is hitting the guys that did GTA. I mean, that's like...
Activision's chart was also really awesome.
Was it? Okay.
Oh, super awesome.
Maybe
and then EA's is also, EA is like a 10x stock. So like, ignore this.
What happened there? Loud.
That's 2008. But even before that, so like if you bought it when it IPO, like you're doing fine. But yeah, 2008 happened. But yeah, you bought it here and there. It's almost 10x. It's 10x, I think, with no, not even with the dividend. It'll get closer, but yeah.
Can you check just for fun what's the tiny build?
Yeah, what's the just a tiny.
I think it's one word.
TBLD.
They done recently.
Oh, they've done really well.
Do a 1 year. Do a 1 year chart. Give them a little more.
That's pretty good, you know, because if you do this, yeah, 69%, it's pretty good.
Nice.
You just have to ignore this part. But if you start here, that's pretty good. Not bad. Not bad. Just don't look at Q1 or not Q1, Q4 of 2023. Just doesn't exist.
Stabilizing.
Yeah. Pretty good. And they have like no game release that's significant because the freaking Hello Neighbor never came out in time.
Is that what happened?
Yeah, I think so. Where did it go? It was the most anticipated indie game, and it's just waste of potential. So,
oh well.
Yeah.
What other gaming stocks are there?
There's CD Projekt Red.
Oh, good old TGOY.
We'll do it in US dollars because I want to not use Monopoly money. I'm just trolling you, Europeans.
Dude, I will never forget the rise in anticipation of Cyberpunk and the subsequent just fall from grace. That's what that is.
That was here. Yeah. That was all this. But then the rally from like the lows, the epic rally that it had, was the Cyberpunk TV show that brought in a lot of sales.
Well, it brought people back to the game that they had then fixed.
Yeah.
And look at it now. It's actually been rising for what's the 1 year chart in this thing?
40%. Yeah, you got a game studio where it's a better business friendly environment. The developers are paid less, cheaper.
They've done a lot of
cost of living.
Well, they have office. They have a Canadian office too. They have a bunch of different stuff. They also have Good Old Games, which is nice. That's where I think I downloaded Warcraft 2 to like play it again. But
And then I think otherwise, like video game development, it looks like there's a benefit to having it in-house to the actual consoles. So you have Sony with all of its studios, you have Microsoft with all of
yeah,
its studios, and so there's just an inherent advantage. And then also when you kind of look at Nintendo, obviously, I think Nintendo's. I've said this before, Locke. I don't know if you remember me saying this, but I'm going to maintain it. Nintendo is a great company because as a customer base that they can just keep shafting again and 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 again. And the customer base is like more. So it's
the thing is, Nintendo, have they started returning any capital to shareholders?
I think so. Yeah. I'm
They
pretty
have.
sure they do a buyback.
Is it like tiny though? Because the thing I
Yeah.
remember they had a massive bank account.
They have a pretty pristine balance sheet, all things considered. Yes. So like you don't have to worry about that. Yeah, they have been doing buybacks. So like in the past 5 years, they've bought back 3% of the 2.6%. And then they also have a dividend. But again, you have a customer base that just like you can just shaft them so much every year. You can give them the same game and they'll buy it again and again and again and again.
I mean, to be fair, they've made some good games. I think people liked the
Zelda.
Zelda. I was going to say the
That
Link game.
you're talking like one-offs. That you know the
Didn't
one
they
that
make like
they've
a
been
couple
like,
sequels to it?
oh yeah, they'll milk it. But I'm
Yeah.
saying like a game like people were asking, begging forever, like a true, more 3D style Pokemon open world game, as an example. Because I know I forget if they even released one yet, but like forever, it was like always they were teasing it.
Yeah, and you got it with Pokemon Go, right?
Get out of here, Pokemon. Yeah, it doesn't exist. So like that's something that they were just like, people want it. I know they don't. No. Well, they have exclusivity to all Pokemon games. It wasn't good though. But they have. I know they have an exclusivity to all because they own part of the company that owns Pokemon. Fuhad and Alaka are now going to fight over whether or not it was good. And then I don't know how many like iterations of Mario they have.
Oh, dude. Yeah.
So like how many games of Mario?
Also, it's crazy how like when you say they've shafted their fans, like the whole thing didn't they have the whole thing like basically there is this whole like grassroots movement that loves Super Smash Brothers, and Nintendo just like hates them. It's like these people do this beautiful thing, and Nintendo's looking like fucking disgusting. Like they hate it. So
that's actually pretty funny. Yeah. Well, I think like Sony Sony probably has that right balance, I think, of a capital return. You know what's funny? If you go back in time, there was I forget the video game YouTuber around this time, he kept always making fun of Sony. He would look at their stock price and he'd be like, yeah, they're just eating like ramen noodles over there. That's what he would say. If you had bought it when that guy was saying that, you're not upset with yourself.
I like how like Fabio knows video game guys because they make fun of stock charts. Dude, look at the thing during the .com bubble. My goodness.
You know, and you laugh, and I was actually pretty young when I watched that guy. So even back then, I was just like, "Is this my first Contra?" And I didn't even know. No, I didn't buy Sony, but I should have used that as my Contra, like my very first one. They're like, "Damn, I should buy Sony." This guy has no idea any of this, and he's saying Sony's eating ramen noodles over there. And I was, and it could have been easy. It was like, oh, I have a PS4. The PS4 looks good. Buy Sony. You know, there you go. There's your thesis. So apparently, like the new PS4, PS5, the new one, like I think it's PS5 Pro or whatever the hell the newest one was, isn't selling so well. It's just like a lot of PS5 people don't see a reason to upgrade. It's whatever. So, anyways, yeah, we were just talking about video game stocks and studios, tough business. The actual console guys, a bit better because they also control the studios too. They control some of the studios, the exclusives, etc. Sleeping on Japanese devs, sure, sure. Like Capcom, whatever the fuck. I'm buying Sony based off PS4 as a Peter Lynch move, and it would have not turned out that bad. So, yeah. All right. I think we've covered every topic we wanted to talk about.
Mm-hmm.
All right. So
We can end on one spicy topic.
Spicy topic.
We talk about one industry we want to buy. What's one industry you think will do bad or you want to stay away from?
Ooh. Okay.
Sector or industry, whatever you want to say.
Okay. Can it just be underperform? Can we not do negatives? Because I don't know.
Yeah, no, I'm just saying. Yeah, underperform.
Branded consumer staples.
Hmm.
Easy layup. Multiples have expanded tremendously in anticipation of the safety trade. So you're getting like Procter & Gamble at one of the highest multiples it's ever been at growing at anemically. It's growing pretty anemically.
At or below
same
inflation
thing.
at this point.
Yeah. So that's the sector I'm not interested in even in looking at. Okay, some names, because of specific reasons, are maybe a little bit interesting, like Hershey's.
I thought you were going to say Hershey's. Yeah, I was going to say
Nestle.
Hershey's.
I haven't looked at Mondelez. I think Mondelez rallied, but Hershey's, Nestle, like Unilever is going bananas. Is Clorox doing okay? Clorox after COVID just died.
People stopped caring about cleaning. Oh my goodness! Look at the.
I don't know. Like you got to also understand, it was believed by many people that Clorox was like the growth consumer staple all throughout the 2010s. Like you go back in time to like 2017, you're like, oh, you buy Clorox, it has the better growth, blah blah blah, and like 22% since then.
Yeah,
because you had this, right? And so from here to there, you're like super happy. You're like, I'm glad I chose Clorox.
Clorox, I am OP.
Yeah, I am OP. And then Unilever was always like the value play. It's like, oh, Procter & Gamble was so expensive. Here's the value play. And finally, it's having its day in the sun. Procter & Gamble, I had an unintelligent opinion back over here. And I had a very unintelligent opinion. So, hey, egg on face. Hey, this is a good example. So I didn't short it or anything, but I had the opinion. I'll just state an old opinion I had. I was like, yeah, there's no way. It's a shit company. I would never buy this. It was Procter & Gamble trading at 13 to 14 times earnings. This 2018 dip was like just broader market dip. But around this time that I wasn't paying attention to enough, I forget if it was 2016 or 2017. It's all a blur now. But Nelson Peltz got involved. Nelson Peltz did a whole campaign. I even watched it. I watched him go on CNBC, and he was saying like, "Oh, they're ruining the brands. They haven't resonated with people like my grandchildren. Blah 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 blah." And I'm any involvement, make some changes. And bada bing, bada boom. He actually kind of righted the ship as far as strategy goes. Wow. And then they had like some resurgence of growth, and then the market just went bananas with them, and they re-rated to a much higher multiple. So they went from a 14-ish multiple or 15 and forward multiple to right now maybe like a 25.
So back to what we previously said, like when the guy was so much shorting Berkshire, like this to me seems like if you're going to short like one of these big companies, like an easier one to look at.
Like run a long short, yeah.
Well, I'm just saying because the Value Investor Club guy. That's what I was saying. Like I feel like there's easier ones to find. And No, I think you're spot on.
And then CHD is another one, but they've typically have had better growth. This is like the Clorox. So when I hear people talk about CHD, reminds me of Clorox 2017. People going, oh, CHD, it's the one with better growth. So you should pay a higher multiple until it's not, until the growth just like completely dies. Then you have underperformance. I probably think you're probably going to underperform CHD buying now for at least a while.
See, the next year, I still think consumer discretionary, especially not tied to travel, is going to struggle.
Got you. Right here, this guy.
How's that guy done recently?
Yeah, it's the same price I remember from like back in 2019, actually.
Oh, really?
Yeah. Okay, you see? Boom. I was like, that's the same price I remember back in 2019. So yeah, the door industry.
Okay. Last quick thing, if you want to talk about real quick.
Yeah, let's go.
There's one company that I thought was interesting to look at, and you reminded me because of the ticker you just typed in. But it was
oh yeah, they're down like 17-18% today. Yep. But did you see why? I think it's pretty valid. Okay.
Do you? Like you don't think it'll run up again?
That buy offer is not there anymore.
Did you see what they said though? They basically said we're not taking that buy offer. We're gonna field other offers and Arrow can bid again.
No. That's what they did. They disbanded completely.
Hold on.
The
Let me
committee.
make sure.
Here. You bring your source, I'll get my source.
Hey, I disagree with you, therefore I must hate you.
Yeah, so I have it that Target Hospitality stock drops as special committee to evaluate buyout offer disbanded. So let's see. In connection with the review of the offer, the committee launched in connection with its review of the offer, the special committee launched a formal process to solicit offers for the company and invited Arrow to participate in such a process. However, no formal offers were received, and Arrow did not reaffirm the TDR offer or advanced any alternative proposal. How I'm reading that is while that committee was there, they opened it up, they received none, and then Arrow did not reaffirm it.
And the committee is
they're getting cold feet. They're just like, we were giving them all this cred, Andrew. Like we were legit giving them credit. We're like, yeah, they know their company. They knew this was coming. Maybe they didn't.
Wow, I'm wrong. Okay. Yeah, maybe they didn't know that was coming.
They didn't see this coming, and then they're like, oh shit.
The market thought the same thing too.
Yeah. We just all thought that they understood their own company.
Okay. So now let's just look at sell side, because sell side's attempt to adjust estimates and everything.
Now you have to evaluate it on the company entirely. Is it cheap or not? And it's probably actually pretty cheap. So.
16% free cash flow yield.
I want it lower, as Sauron would say. To quote Sauron, lower. No, I'm kidding.
If it's got declining revenues for who knows how long, it could be an issue.
Not if they buy back 16% of the share count every year.
True. But are they going to do that? No.
Why? Because they're a bunch of Nancys.
Mm-hmm.
They don't want to achieve greatness. They want to populate the halls of mediocrity. Oh my goodness. Could you imagine if you had the foresight? I just want to see what that is.
Oh, I did that.
You did that?
Yeah.
I
didn't do that. I bought calls.
Bought calls.
Right there. Right where you had that's where I bought the calls.
You bought the calls right there. Yeah, and you sold your calls here.
Yeah. And then I bought puts.
Bought puts.
Buy my course, bro.
You can charge what if you do that. You can charge whatever you want. But okay, so like
I mean, I didn't do that, but I kind of did that to one company.
you did, he did. I confirm that. It was pretty insane to watch. Okay, so yeah, it's something to look at. I'm really happy I did what I did then. I have my puts.
I am too.
And it's my sold puts, by the way,
Mhm.
and got rid of them in a prompt fashion. How did everyone else? They probably got dragged down just because they're down today.
Which is kind of silly. Although,
This one, unironically, is pretty attractive investment. Core Civic. GEO. I mean, I think GEO could have more upside. It's the more levered of the two. And actually, it has had more upside. But like Core Civic, I think, is more of a straight shot to victory. Buyback story, debt pay down. They're getting right up to their leverage target. So,
Okay.
and then it's just going to be buyback like crazy. And they trade pretty cheap.
Mhm.
So, my only exposure to these guys is I do have some sold puts that
Wait a
are
minute.
pretty up right now. So. My personal holdings.
Oh, never mind. Because it
What?
looked like related stocks, like it says compared to, and normally it's like stocks related and Mankind Corp. And I thought that was some kind of like prison company, and I was like, that's kind of messed up. But it's not.
Mankind.
It's like a biopharma. I don't know why it's.
It's totally the same thing.
Yeah.
Yeah, they're related. I think they do tests on inmates, you know.
That was bad. On that note,
On that note, thank you guys so much for joining us here tonight. If you enjoyed the live stream for 2 hours and 19 minutes, feel free to like, share, and subscribe. If you're on Twitter, you can like it as well or retweet it. If you're on Twitch, you know, you do your thing. And then also, if you're curious about the investment club, you can check the description below. With that being said, we'll be seeing you guys on the next one.
Okay. We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.